Hello traders, welcome to my YouTube channel. My name is André Cardoso. I'm a global market analyst. I'm also a trader. I used to share some of my views inside the market with those who have interest on my work. Thank you for being here. Thank you for following, for those who are already following my work for a while. I hope somehow you take advantage from the educational content that I'm providing you or that I share with you. I'm not here to share specific trade setups or entries or target levels or stop losses, or actually I'm not here to talk about the risk strategy you need to trade the market. So each one of us needs to develop his own risk strategy to trade the markets based on the technical approach that you use to approach or to engage the market. I use advanced patterns to try to take advantage from them. So I try to take advantage from those advanced patterns because we know where they will invalidate. We know we have always a default target for a specific pattern. So there's always a default price projection once the price prints you a specific or a particular price behavior. So in this case I will use cable as an example. This is cable on a 4 hours time frame. We are trading between a daily resistance above, 4 hours support, monthly support a few points below also, and we have now the market. The market is developing what we may call a cup and handle formation. So at this point we have this handle formation. The market has extended extended the momentum to forge the handle. It has rejected to trade above this previous structure resistance, as we can see here. Again, quite a few times, quite a few candles rejecting this previous 4 hours resistance printed last 8 January. And the market has already rejected that resistance, and in consequence the market has decided obviously to start to fall. So we are now again threatening this ascending trend line as a support level. So the market has already violated that trend line. It has resumed above, and it is now acting as potential support level again. So it was acting as a resistance once broken. And we are now, we keep forming, in my point of view, we keep forming the handle, and I still believe there will be an opportunity to trade higher with cable. So cup and handle formation, it requires the price to trade above. It needs to retrace, to retest this resistance as support level. So we need to wait also for a while for that to happen. If that's the objective, to break above this resistance, retest, and an engagement below. Okay, this is my view on cable, and obviously rejecting to hold or to remain above this structure support will increase the probability to fall again and to trade lower, obviously. Euro versus dollar. Euro versus dollar, I was expecting this breakout above this previous structure resistance. This is the daily resistance. I will not be surprised with a retest of this level. Okay, retest of the daily resistance. It will turn it into a support level. Let me show you the 4 hours time frame chart and what I am expecting. Or actually let me go into a daily time frame for a clear picture. And what I'm expecting at this point, note that we are trading the 78% retracement from this structure high, so which may act as eventual. This is synced also with the golden ratio from these highs, but it's like a cluster zone which may put some pressure and force the price to actually to pull back. The market has not touched the golden ratio yet. The market doesn't need to go there and to touch the golden ratio, but it's a strong level. Synced with this 88% retracement, the market has failed just by a few points to touch the 88% retracement from this high here. Okay. And above at 168 extension, we have the shark pattern, reversal Fibonacci extension level 116.78. This is the Fibonacci reversal extension level, and above the default pattern at 88% retracement. So at this point, the market can start to trade lower and break all this structure below, but the pattern that I will search for, that will offer me the best risk-reward opportunity, positioned between, let's say, between the 78% retracement and the 88% retracement. So the shark pattern, a few points below the 78% retracement, the 168 extension, and a few points above the 88% retracement, the default pattern. Both the cases require stops positioned above the starting point or this high, the most recent, in this case, structure resistance, monthly resistance, and weekly resistances. So in both cases, the strategy requires stops positioned above this level. Okay. And this is my view on euro versus dollar. I still bullish until the completion of those patterns, and even though I need to check the market conditions once the market approaches those levels. For those who are using stochastic or MACD or RSI or any other indicators that you use to identify a potential reversal zone, as soon as the price approaches this level, I advise you to look into those indicators and to search for your best entry between that range. Aussie versus dollar develop what we may call, let's jump into a weekly time frame chart, a double bottom. The market, as we can see here, has squeezed low, printing this daily support, the 224 extension right below. I was expecting, when I saw that spike down, I was expecting the 224 extension to trigger. The market has failed that specific Fibonacci level just by a few points and then recovered immediately. This is last session, last week, last Wednesday sessions, overnight session. All the markets, most of them fall, or at least the yen pairs, and the dollar related pairs have synced. And this is, this candle week is a consequence of those news, external news events. Then the price has recovered 100% of all those losses, and they started to trade higher, recovering above the weekly resistance positioned at 70-105. So this is the weekly the previous weekly support level. This the previous bottom. Daily resistance also recovered, so it's now again a support level synced with the previous support. Trading above the weekly resistance above will increase the probability to trade higher, and above I have another pressure level or eventual pressure level to look for one eventual short opportunity. When I say short opportunity, I use specific targets for that pattern. The market can trade even lower, print new lows. I will try to follow that behavior, but I have default targets to trade those patterns. So, but again, we need a breakout of this structure, in order to trade higher or to increase probabilities to trade higher. Trading above the weekly resistance obviously will increase even more, so the market will trade above the previous resistance and recovering above the previous support level, actually the previous monthly support, will increase the probabilities to retest these highs, and at that level, approaching that level, we have this bearish sharp pattern at 1618 extension, the reversal Fibonacci extension level, synced with the 78% retracement, previous structure highs. I will not be surprised to see the price, if the price starts to trade those levels, a fall from those levels will not be surprising at all. Double bottom, neck zone, as always, a broken neck will offer you an opportunity to trade higher. For those who want to trade the 2618 trade setup, you need to wait for a resistance above the neck and the 618 retracement. What I mean is we need a breakout above the neck, resistance printed above, and the golden ratio pullback. So actually what we will need is something like, actually let's consider this the previous bottom. What we need is something like resistance above the neck zone and a pullback to the 618 retracement, and from here we can start to project a default symmetrical ABCD pattern. And as we can see, and this is just an example, we don't know where the price will form the next resistance if trading above, but the market can find a resistance at previous support a few points below. We just need to adjust our Fibonacci level. As soon as we find a resistance and we see the price start to fall, we push our Fibonacci tools and we measure the retracement, and we wait for the golden ratio in order to try an engagement above. A symmetrical ABCD pattern will send the price, using this example, will put the price at this level, let's say around this completion point for the pattern. That is the objective, to search for a golden ratio entry level that puts the price above. Okay. Again, pure speculation, you need the breakout of the structure, and we need validations or confirmations to try an engagement once the price approaches that level, and the price will offer you other opportunities to trade during that process. Kiwi, I still holding these positions, so it's a 4 hours time frame chart. I still trading this bullish pattern from below, so we have my entries positioned below. We are now at profits. We have our stop losses positioned below the most recent 4 hour support level. I have my stop losses positioned already below these levels. It's a free risk trade setup from here, so I have nothing to lose if the market decides to pull back, but I still believe there's room above. Retesting this daily resistance will not be surprising, and I have my second target already. Actually, I took some actions at these highs, considering this as my default second target. The market has failed my default target just by a few points, but I have decided to share with those who are subscribing my service. I've decided to share, okay, let's start to partitioning the position again. Let's partition the position a second time, and let's adjust our stops to profits if the market decides to print some relief from here. 200 moving average also. But we're still trading. We have broken this bearish descending trend line, so I still believe there's room to trade above. And with my stops position below, with just the last portion, the third portion of this position, holding that small portion of my initial position size with stops position below, I have nothing to lose. So if the price decides to pull back, so be it. If the price decides to go even higher, I will try to follow and adjusting my stops during that process from here. At this point, we have no clear advanced patterns forming or under development. Let me just check here. This is the golden ratio pullback. Let me try a 127 extension from this first swing. So very close to the most recent high. So the 127 extension, a new high above the previous one, just to touch this level will not be surprising also. So I will not, it's not the first time the market will print you a false breakout, okay, and that's what we like the market to print. I don't mind if the price decides to print a false breakout and another harmonic pattern below, okay, if the price decides to print me something like this, it will print me another opportunity to buy the market if necessary, but that's not what I'm seeing at this point. At this point I can see Kiwi trading a few points below, and let me go into a 1 hour time frame. I can see Kiwi printing this. Actually it's even a lower time frame. Let me try a 30 minutes time frame chart. This is actually some of the most lower time frame patterns that I was searching for recently, just because I'm holding my long, and I want to get a clear picture of what the market can print me on lower time frames. So at this point, false breakout, 168 extension, 200 moving average, again breaking below this structure to form the pattern and to bounce will not be surprising. And for those who are studying those patterns, I believe you are familiar with those. So a pattern that usually breaks in the direction of the previous swing. So I will, let's say, I will consider this level as a potential reversal zone, or at least the first one. The next one will be actually the 161.8 extension and the 224 extension. Let's check if we have some confluence here. So I will not be, the same way I will not be surprised to see Kiwi trading the 168 extension as a reversal fib level. If the market fails there, I have the 224 extension, which is synced with this structure from the previous broken structure. So this structure trend line, again, retesting these levels, it's very possible. 224 extension, but the first level to search for eventual support, the 168 extension a few points below. This is a 15 minutes time frame chart, and I prefer higher time frames because usually the reliability of those patterns are better, work better than on a lower time frame. So I prefer to study and to follow the market on higher time frames. That said, my view on Kiwi, eventual bearish momentum, and later more upside momentum followed. Then we have Aussie versus New Zealand. Let me try to see what we have here. Eventual double top forming, and I was expecting, can you see this week candle from those news last Wednesday? It has changed a lot of people setups or expectations, because people were not expecting for that sync. Aussie, New Zealand, yen pairs, dollar related pairs, all of them has felt the consequences from those news events, and it has, all those markets have produced a huge slippage. And look at this huge candle week daily support. This was something like, I'm not sure, 400 points and something like that. 450 points. Incredible. Well, as you can see, the market has recovered all those losses during those news events. It has recovered above this previous triangle or structure formed below as a sideways process. The market has broken above as expected for the pattern at this point. The market has failed the completion point for those harmonic patterns, for the bat pattern, not invalidated yet, because the market can print me that pattern before breaking these lows. So I can see the market trading sideways, trading the 88% retracement, completing the pattern, and then I will expect a 38% retracement from there. So I will not ignore Aussie versus New Zealand to push a few points higher, to retest these levels, previous structural resistance, and then from here a relief. Obviously the bat pattern, we have three levels, actually two levels for the bat pattern. Obviously one, the default level, the 88% retracement from this high, so we have a measured movement or a measured Fibonacci retracement from this range, and we will search for the 88% retracement if the market offers me this specific criteria, based on Fibonacci retracement also. So then later, if the market decides to retrace to the 88% retracement, it will print me the bat pattern. The bat pattern can extend if the bat pattern fails you at 88% retracement, one high above the previous one, just to hunt those stops, put bad position at above, to form the alt bat pattern at 113 extension. Okay, and obviously if the bat pattern fails you, just grab it. The crab pattern at 168 extension, it will be the last resource, let's say the last resource for bears, considering harmonic trading. Okay, I'm not saying it will invalidate the short if somehow you have criteria to short the market at this, around this price level. There's also a crab pattern which may increase a little bit the probabilities for the market to sink from there if you have other motives to trade. You have previous structure support level, previous structure resistance level, so it's a nice pivot zone to search for sales. Stops required above the previous resistance, attention to those levels, so attention with your targets and with your stop loss positioned above this resistance. So what I mean is attention to your risk-reward ratio. Sometimes sometimes one awesome and spectacular price behavior and amazing pattern will not offer you the best risk strategy to trade. Sometimes you need to sit above your hands and just watch the pattern to work without even participating. So at this point, engagement levels, 88% retracement, eventual at 113 extension if the price extends above, and ultimately the 168 extension, the crab pattern, I'm sorry, at 10865. So this is Aussie versus New Zealand, and obviously the market is creating or forming a fractal here, so which I will not be surprised to see the market trading below. That said, breaking these previous structure resistance as support levels, will increase the probability to trade even lower, and obviously weekly and monthly supports below, which may produce put some pressure if the price approaches that level. As we can see here, if you extend this trend line, this structure trend line, that crosses all those close prices from all those candles. If we extend all that, if we extend this trend line, and if you imagine a retest of this structure at the monthly support, perfectly doable, no? Retest and a bounce, or a retest, break below and break below and trade and keep trading lower. So at this point, nothing specifically. We need to wait. This is a 12 hours time frame chart. We need to wait for those levels. Set your alerts. Dollar versus CHF. I published this chart this morning among some of the communities that I'm working with. And this is the dollar versus CHF trading at the 224% extension. This is the shark pattern. The market has already produced the first one at 168 extension, has pushed to the 38% retracement. The default target is a few points above at the 50% retracement. The market has decided to find support or to form a resistance, at the 38% retracement, and then new lows. New lows, as soon as the market violates this structure, I was expecting, okay, the market has bounced from the 168 extension. The market has achieved the minimum expectation of the 38% retracement. Now I need new lows. New lows where the 224% extension, the golden ratio a few points above. As you can see, the market has recovered already above this level. The market has triggered the pattern, and for those who decided to participate inside this, which I'm not, but those who are participating or who have engaged this market are already trading at profit above the actually the market has recovered already above the previous daily support printed previously. So the market has recovered at that level, which is not a sign of a bullish continuation, but it's a nice sign for those who bought the market at this completion point. We're still waiting for a default target for the pattern. That's what I'm missing. The default target for the shark pattern at 50% retracement, which is also the previous structure daily resistance level. This candle here, it has closed the day in that it has forged the daily resistance, and then the market new lows. Obviously, at the end of the today's sessions, those levels needs to be updated because the market has already moved after those. Dollar versus Canadian dollar. Also, we're still holding these shorts, so I still hold a position for these. This is actually a huge pattern that I still expecting to trade at my targets at the 38% retracement. I published that chart among some of the communities that I'm working with. As an example, my service as a provider. So I shared among my subscribers this chart, and among other communities I'm working with. As an example, the Forex Analytix team and Forex Analytix community, which I really appreciate the opportunity to work with. And I shared that opportunity with that community also, so I believe there were a few people, at least trying to take advantage from that. This is a weekly time frame chart. I still believe there's room to achieve my targets. Actually, there's nothing to fear about that, because the pattern has been printed and it has started to work. So at this point, I just need to wait for patiently for my target. I have my positions, I have my stops already positioned at profit below the month, above a few points above the monthly resistance, which I hope the market fails to bounce and to achieve those levels at least. But no matter if the market decides to go there, I'm a profit already with some of the position size already in my pocket, so nothing to fear from here. It's a weekly, or let's say a 2 days time frame chart, or a daily time frame chart. As we can see, we are approaching my default target, but for that we need to confirm a breakout below the weekly resistance, which the market is rejecting to trade below it. So we need to wait for that validation to increase the probability to achieve my targets. obviously the probability has already increased as soon as the pattern starts to work. So that's the pattern is working already, so nothing to just need to wait patiently. Another example, I will jump into dollar versus yen because we have another example of a very similar price behavior. This blue pattern, as you can see here, this bearish bat pattern at 88% retracement, another pattern that I shared among the communities. The market has retested that level twice, and then actually one, second, third, and a fourth time. And from here, I was sharing in a 12 hours time frame chart the possibility for a sell again at this retest. As soon as the price retests this structure again, this third time, I shared the chart with that structure. So the market eventually will respect this structure and will act as a resistance level. And well, the market has decided to fall and give sequence to the bat pattern. It's now trading the golden ratio, previous or the most recent support forged at this level. We can see also the same week candle extended below, forced by those external news events. So we are now threatening the golden ratio. I still believe there is room to push below in order to retest this ascending trend line approaching from below, so it may act again as support pressure level. I will not be surprised to see the completion point or the reinforcement of this 161, 78% retracement to complete this pattern. If that happens, I will try an engagement trying to retest this previous structure or a few points above, because usually this is the shark pattern, and the shark pattern will trade the 50% retracement from these highs to the most recent lows. So eventually the price will retest those highs at this level again, the 50% retracement, if there's a bounce from this level again. Okay, dollar versus yen. But the example that I want to show you is this bat pattern on a 2 days time frame chart, the bat pattern at 88% retracement, which is the same pattern, dollar versus CAD, as printed above. Okay, dollar versus CAD, 2 days time frame chart, 88% retracement, bearish bat pattern. I shared this pattern just a few moments after sharing that dollar versus yen, and I said, can you repeat the same process over and over again? And this is an example how to repeat a process that you know that is profitable, even if sometimes it goes wrong or against you. You know that it will work quite often, so why not to repeat that process over and over again? Set stops above and short the market at 88% retracement. It's the best that you can do inside the market. Try to find a motive to trade, something repeatable that you can prove to yourself and to your brain that is profitable, because you can go back on history and check those market conditions. Every time the market prints you a bat, how many times the market will fail you, and how many they succeed. So just apply a risk strategy to trade them and repeat the process over and over again until it gets boring. It's so boring to search for those patterns that you cannot imagine. The motivation behind this repeatable process is only the financial reward, only because searching for those harmonics, obviously I really enjoy to search for them and to share my work with others and to try to put people in the right path trading those patterns. But the process itself, it's a boring process, because you just need two tools. You just need price action, and you just need a risk strategy to apply. And if you are capable to apply a risk strategy, and if somehow that pattern is tradable for you, because sometimes, as I said before, even the most beautiful pattern and the most with all the indicators saying you, okay, this is the best place to short the market, sometimes you have no risk reward based on previous structure to position your stops. Sometimes you have to position your stops 10 points beyond your reward, and it makes no sense to enter the market to lose more than what you expect to win. First of all, is already an expectation. It's not granted. It's already an expectation. So if it is an expectation, why to lose more than what I expect to win? So based on that, create a risk strategy, repeat the process, and do that for the next 400 trades. And that's what I was saying, and I was sharing with the community. Are you capable to repeat the process over and over again? Are you capable to repeat this bad pattern process over and over again? Because at that time I was sharing another exactly the same opportunity on CAD to short the market above. Are you capable to repeat that process? If you are capable to repeat that process, you will become a profitable trader. If you are not capable, please avoid the trade. That said, CAD, Yen, NOK. NOK, also an interesting price behavior. Heads and shoulders above, twice. A minor, a lower degree one, the one that I shared among the communities, to short below this neck zone, wait for the breakout of the neck and short the market, or let the market find support below the neck, let the market retest the neck and short the market. Obviously the market has found support below, and obviously this is already beyond the default projection for the heads and shoulders. So what I mean is the default projection for this minor or lower degree heads and shoulders. So this is the neck zone here. This is the neck zone, and we project the distance from the head to the neck. So the same distance from the head to the neck projected below the neck. So as you can see, the price has found support at the default completion or the default projection for this small head and shoulder. Then the market has bounced another right shoulder for these higher degree heads and shoulders, and then a new breakout. Default projection for the major heads and shoulder below, short the market below the neck, default projections achieved. Default projections, 88% retracement, 168 extension. This is the bullish shark pattern, eventual reversal zone, eventual reversal zone. Nothing is granted inside the market. We are now moving sideways inside a small period of consolidation after this fall. There's room below, okay? There's also the 224 extension below the weekly support level. So this is the previous weekly support level. Note that we had here also an inverted heads and shoulder formations, or heads and shoulders formation. There's room below the weekly support to print the same shark, but a 224 extension. But we are now trading what I consider a strong pressure zone, and I will not be surprised to see NOK trading above, searching for a 38% retracement. I believe it needs a small adjustment here. So trading the 38%, searching for the 38% retracement, 50% retracement as a default target, positioned also at the previous structure support level. So this is the neck. That said, I will not be surprised to see NOK retesting the previous neck zone from the major head and shoulder, which by a sign it has not been retested after the breakout. So the market has broken this neck zone and it has fall immediately sink it immediately into these new lows. So a retest of that level will not be surprised. That's the same way a few points below to form this pattern below, also not surprising. Let me check a retracement. I need a retracement here to see. I need a retracement from this level to these highs. Let's try to understand where we are now trading based on these. Okay, we are trading the 50% retracement from all this bullish momentum. Golden ratio position at a few points above the completion point for that shark pattern, so it's a nice confluence between two strong Fibonacci levels. So we have the weekly supports below the most recent lows. We have the 224 extension as the completion point for the shark pattern at 224 extension, because it has completed already at, we are now trading at this level, the 1618 extension, for the shark at 1618 extension, and we have also the golden ratio, the 618 retracement from all these bullish momentum right below. We have also previous, not so synced, but we have also previous structure support and resistance level somewhere between a range a little bit extended range. So let's use those close prices above and this close price below. So we have a small cluster zone. This is a 4 hours time frame chart. Attention to those time frames. And that said, it will not be surprising to see NOK even trading lower, but at the same time nothing is granted. We are trading oversold at divergence. We have bullish divergence noticed already, but as we can see here, RSI is also showing some more bearish momentum, but again, oversold conditions. At any moment the market can start to can bounce and search for other levels above. Let's jump into another one. Dollar versus Mexican peso, also another very interesting chart. I've been following this chart from actually before the completion point of this pattern above, obviously, but bearish pattern at 88% retracement. The market has failed that pattern just by 5 points or 3 points, I'm not so sure, but between 3 and 5 points. The market has failed the 88% retracement and the completion point. I shared that possibility, attention, because the market, it doesn't need to touch that exact level. We need to search for a zone for a reversal, and this is the zone for a reversal. Then the market has decided to fall. We are already trading the second target, the golden ratio position at the 618. A few points below, there's also a remote or an eventual bullish setup. Again, the same level, the reversal fib extension level, the 1618 extension, synced with the 78% retracement. So we have some type of confluence between those two Fibonacci levels. And below, we have those strong support levels, the monthly and weekly support, which the price can obviously retest these levels, ignoring this shark at this confluence zone. The shark, as I said before, can extend to the 224 extension. If that happens, the market will print a new low, hunting all those stops below, and a bounce from here. It's also a possibility, but the first level to search for that pressure is positioned at 1618 extension, confluence between the 78% retracement, but we are now threatening, or actually we are rejecting to trade above the golden ratio, oversold conditions, which doesn't mean the price will reverse. The price can keep trading oversold for an indeterminate period of time, and we need to hold it, or we need to wait for it. But based on the Fibonacci's ratios that we have, we can expect, or at least not we can expect, that the pattern will be printed at the 169 extension, and then later, if failed above, it may force a new low below those support levels, the 224% extension of Fibonacci. More dollar versus yen already show you. I have nothing for euro versus yen, neither for pound versus yen, because those weeks have somehow damaged some of the patterns that I was expecting. So this is the 169 extension, the crab pattern. The market has crossed at this level during those news events, invalidating the pattern. Then the market has resumed the previous behavior. If we ignore these candles, I believe there's a possibility to form the pattern at these levels and then a bounce, which is still possible. But this trend line above, for those who are searching for opportunities to buy this market without considering those harmonics and those patterns, I believe they will wait for a breakout of these structures. So if the market decides to trade above this descending trend line, we will wait for a retest, let's say a bounce above the trend line, a retest of the trend line, and then eventually a bounce from here. Or those who want to trade a direct breakout, eventually will have luck and the market will go directly to higher territory. But usually the breakout traders will wait for a breakout, wait for a retest, and then an engagement. As we see here in this example, pound versus yen, the market has ignored crossed those default levels, oversold, immediately recovered. So this is a huge bullish candle. At this point, I'm not expecting the price to retest these levels. I can see the market trading a few points lower and then a new bounce without breaking these close prices or without reaching these levels. I'm not sure if it's possible to see a new lower close, new lower close below the previous ones, and then I can see a bounce from these levels. And this is pound versus yen. Aussie versus yen also the same thing. We have a different situation, because at this point we have here those who were holding these head and shoulder sold or short opportunity eventually took advantage from this week, but then the market has decided to recover immediately. Let's say 100% of those losses, the market has recovered immediately and it's starting to trade higher. It's exactly the same circumstances on yen. So I still believe there's possibility to retest of these lows without breaking them, or with a new low below these levels, but not so much. Let's say searching for bullish divergence and then a new high. At the same way, there's a possibility to retest this next zone without that relief below. So I can see the market trading directly to this level, searching for this previous structure support level, the next zone for the head and shoulders above, retesting that level, and from here the probability for the market to pull back again will increase for sure. Obviously, we have previous structure support levels that the market needs to violate first in order to trade higher. That said, at this point, and again, based on the most recent Fibonacci levels and ratios and the price action, we have no specific or clear pattern or harmonic pattern for most of the yen pairs. New Zealand versus yen. We try to see what we have here. As again, it's a very same situation. Those weeks has forced the price into new lows, recovered immediately. I still believe there's a possibility to retest the 200 moving average. Again, retest the lows or a print or even a new low. It's also a possibility to search for divergence and then new highs, retesting the 200 moving average. At this point, we have no clear patterns here. Let me just check if the market has found some support at or between the 161 to 24 extension. Not at all, the market has ignored those levels. Some pressure at the 168 extension, and it's now acting as support, the 224% extension, as you can see here. So the market extended below, recovered all those losses, support again at 224 extension. So again, the same thing for other for the majority of yen pairs. I will not be surprised to see a 50% retracement from those close prices above the 200 moving average. It's pointing there, and it's not granted, but the 200 moving average at least it's pointing there. Minimum expectations, I can use a 38% retracement from these close prices. If you use the week, we are already trading between the 38 and the 50% retracement and the 50% retracement, which is the default target for the shark pattern. Okay, if somehow we consider this as a shark pattern and we ignore that week, we need to make some adjustments, obviously, to these lows, to the retracement level, to search for targets. And again, so default target at 50% retracement, 38% retracement. This level is interesting because it was the previous 168 extension, so it may act as a resistance also. So trading at those levels will not be surprising at all. And this weekly candle, it's only now starting to let's say to bounce. No, the market is starting to reject to trade below those levels, and trading higher will not be surprising. Note that based on what we have here for now, don't get surprised with new lows, because the market, but not before new highs above the most recent ones, because at this point I can see one eventual heads and shoulders which requires the right shoulder and then the neck breakout. Okay, but again, this is a weekly time frame. The right shoulder to form needs to trade higher, and that if you decrease your time frame, that's what I'm saying. So I can see the market searching for this 200 moving average, right shoulder, and broken neck later. Okay. Again, nothing is granted. Observe the market. Sit above your hands is sometimes one of the best things that you can do facing the markets. Watch the market. Wait for those validation. Wait for those validation points and criterias, and then once you feel comfortable, engage the market. CAD versus yen. This was one rare case where where that week has also worked to form the pattern. Very tricky to trade, because if you are not there at that time during those news events, you never enter this trade unless you have set an order to buy the market at that exact price level. You not be able to trade it. But sharp pattern at 168 extension, we are now retesting previous structure support level. The default target is the 50% retracement, so the price eventually needs to trade a few points above. But if you need a minimum requirement, the 38% retracement is just a few points above the most recent the most recent highs, let's say the 1 hour support or 4 hours resistance here, previous support, now resistance, pressure level, 38% retracement above. I can see the price moving sideways a little bit and then retesting the 32% retracement, or failing that level and resume below is also a possibility. On a weekly time frame, I was expecting, and I still, because this is not invalidating my idea, to see Canadian versus yen trading lower. This weekly weak candle, the week from this candle may represent some more bullish momentum. That will depend the next session days. But again, minimum expectation 38-50% retracement from here. Let's wait and see. Let's wait what the market will offer us. Also, eventual next zone, left shoulder, head, and eventual right shoulder. Okay. Stay tuned. Oversold conditions. We are now leaving oversold conditions. The market is now abandoned that condition. Stay tuned with the possibility of a retest of this structure a few points above. 50% retracement, default target for the pattern. Right shoulder, broken neck, new lows, shark at 224 extension. Shark at 161 extension from this swing actually. Okay, let's wait and see. It is a weekly time frame. Euro versus cable. What we have here, we're still trading in a long sideways process. Let me go into a daily time frame. And my idea here was, let me push my extension tools. An extension from this last swing projected above and searching for the 168 extension. So it's still possible. The market is now threatening this resistance structure trend line above, trading above to form this sharp pattern at 168 extension. It was what it is what I'm expecting, but again, trading above this trend line will also increase the probabilities for a new swing high. No one will assure you that will happen. No one will assure me that the pattern will happen too. So make your decisions. At this point, I can see a new high above the previous one, hunting those stops positioned above to form the pattern, and then new lows, searching for the 200 moving average below. Euro versus cable, euro versus Aussie, or versus Australian dollar. I was trying to short this one. I failed to re-enter the trade, so I simply ignore, because those news events, the same way Aussie and yen pairs have synced, euro versus Aussie started to trade higher, reaching my stops. So I entered the trade a few points. Actually, I entered the trade at 88% retracement, and then the market decides to hunt me to print. Actually, they searched for the 113 extension, which is no relevant for me in terms of harmonic trading at this point, based on the most recent price action and Fibonacci ratios is not relevant. But then the market has resumed again. It has recovered all those gains again. It has synced again. It is trading at targets already. So obviously from these highs, the market has already achieved the 38% retracement, but the market has failed the pattern, not the short. Another example. This was euro versus Aussie, euro versus New Zealand. Similar situation. we have also here, actually we have a few things here under development at this point. So we have this right shoulder under formation at this point, so this is what I see. The market has completed this crab pattern, at 161 extension. Then the news events has triggered this extreme volatility, and again kicked me out from this market, and then it has resumed, and it is now forming one eventual head and shoulder. The neck is positioned at the daily support. Below the daily support we have the default projection for the pattern, which is now positioned a few points below the golden ratio, but let's target the golden ratio. So targets below the support at 166. Okay. Obviously, if the market decides to trade higher, breaking the head, it will increase the probability to trade even higher, and I don't care about that possibility. Another one, kicked by the volatility, it was the pound versus Aussie, the 88% retracement, default bat pattern completion point. It has provided me a few points, but then immediately recovered above, and then when the market started to recover again, to trade again in my direction, those news events have triggered and well, extreme volatility has forced the price to print the alt bat pattern at 113 extension. So at this point we are already trading the 50% retracement, 200 moving average above, the next pressure zone at the golden ratio, which is the second target for the alternate bat pattern printed at 113 extension. So second target at, let's say, 176.19. Okay. More. Pound versus New Zealand. Let me check my trade here. I'm still holding a small portion of this long. I bought this pattern here below that 184.23, the 224 extension. I entered this long position. We are already, the market has achieved my default first target at 38% retracement. So at this point I have already, it's a free risk trade situation, so I don't have risk involved in this trade anymore. So my stops at break even. The market has decided, obviously, and as usually at those levels, the market has decided to print some pressure, to print a relief. It's now retesting the previous daily support level, and I was saying to my subscribers, okay, there's one eventual bounce from this level. So actually, I shared once above. I shared the possibility for a relief, retesting this daily resistance. So the market has retested that daily resistance here a second time and a third time. So we are retesting or threatening the daily support. From here I expect a bounce. At the same time I am buying New Zealand, or the Kiwi, New Zealand versus dollar, which may force Kiwi, cable versus Kiwi to trade a few points lower. Okay. Beside that, and because I have my positions already secured with break even and some of them at profit, if this one starts to trade lower, my Kiwi will trade higher. If my Kiwi will trade higher, if my New Zealand versus dollar starts to trade lower, this will bounce from this level. Okay, and again, as soon as we approach the 224 extension, we have a bearish crab pattern already printed at this point. So attention to those levels. Now let's go into Dixie and let's try to dissecate what we have here. So initially I was checking the possibility for a bounce between the 88% retracement and the 113% extension, so which is this level here. So the 88% retracement is the default BAT pattern at 88% retracement, simply that. And then if the market fails me at, as I said before, if the market fails at 88% retracement, we have the 113 extension, the alt BAT pattern. And as usual as when the price fails you, or when the BAT pattern fails you, you just need to grab it. What I mean is you need to extend this swing, the first swing to form the BAT pattern. You will extend that swing to the 168 extension, and we will search that will complete the crab pattern, the bullish crab pattern in this case. And that was my expectation when I saw the market failing the 88% retracement, failing completely, ignore the 113% extension. I was expecting the market to search for these levels, which is also the previous weekly support. Okay, if you go left, you push back, you will see these as previous structure support levels. So weekly support below, the price has started to pull back again, above the monthly resistance level again. Okay, and I will not be surprised to see new lows to print a pattern to retest this structure support level and a bounce from there. At the same time, nothing is granted. The market can bounce from here, retesting all those structure support and resistance levels above without filling these criteria, and that's it. That's what it is. I still bearish on a larger or higher time frame or a long term. I still bearish on dollar index, and obviously bullish for euro dollar. We have also gold, silver, and oil. Gold is trading another bearish BAT pattern territory, so this is also another BAT pattern at 88% retracement, which is here. I still believe. I don't need to believe anything. I just need to search for those behaviors, and if you have a strategy to trade, just trigger. But the default targets for the pattern, 38% retracement, which is synced with previous weekly resistance level. I'm sorry. Then we have the most recent support below. Okay, I'm sorry. Weekly resistance, support below, default target synced with the weekly resistance for this bearish BAT pattern printed at 88% retracement. If you go into a 2 hours time frame chart, you can see here another alt BAT pattern at 113 extension. As we can see here, the market is already trading between the 38 and the 50% retracement. So even though it was for those who are trying to search for, who are searching for an opportunity on a lower time frame to engage these daily or these 12 hours time frame chart or a higher time frame event, this was the best pattern to try a short based on that same higher time frame chart. Also, silver. Silver is trading above the completion point for this bearish crab pattern completion point, the 168 extension. Actually, and in fact, that level is acting now as support level. So we have kind of, and we have that on gold also. We have kind of a double top, and we have the next zone below. Okay, double top, technical double top, perfect shape, perfect V shape, the perfect close, prices at the second bottom, the second top, retesting the close prices from the first, but rejecting to trade to close above. Trading below this level, breaking the neck, will force the price to sink. It's a default behavior for a double top or a double bottom configuration or pattern. You have the same on gold. Okay, we have the same both tops with the second one rejecting to close above the first top. Bottom as a next zone positioned below. Trading below this next zone will force the price to sink. And those are those types of patterns that are the probability for that to happen is so higher that it's well, what to say, it's a double top or a double bottom. Once validated, you just need to short or to buy the market once the market violates the next zone. Then we have, to finish, I have WTI. I still holding, and we still holding this position. This is a long term. This is a long position, and it's based on a structure breakout below and one inverted head and shoulders position below on a lower time frame chart. I was saying yesterday I will not be admired to see this pressure element here, or this trend line, acting as potential resistance, putting some pressure. The market will enter into a sideways process, eventually printing a right shoulder for the inverted edge and shoulders that I draw here. So push back or pull back, and then a bounce again to break the daily support, the previous daily support level. Okay, it's this week here, the market, and then pull back, and then it has started to fall from there. But again, I will not be admired to see this area acting as potential resistance. The market moves sideways, printing some type of a flag or a triangle or whatever they need to print here, and the breakout above that structure, triggering the inverted edge and shoulders, and well, by default, once the market violates that zone, I will see the market trading higher for sure if the market decides to break above. Well, that said, this is oil, and it finishes my introduction or my presentation for today based on harmonic trading or advanced pattern formations. I hope you take advantage from the educational content that I'm offering you. So my objective is to get you synced into process of identifying a strong motive to trade the market. Don't throw your coins and jump inside the market. Try to learn how to develop a strategy to trade, a technical approach. I use, as you can see, I use structure, support and resistance levels, Fibonacci extension and retracement tools, at confluence with those advanced pattern formations, and not so advanced. Sometimes we trade simple patterns as an ABCD pattern or an ABC correction, or a double top or a double bottom, a cup and handle, heads and shoulders. That there are a lot of patterns to trade inside the markets. The difficult part of the process is to identify them and to apply a risk strategy to trade them, where they invalidate the position size that you need to engage the market in order to preserve your capital and not to burn your capital in a few couple of trades. Okay, that is the most important thing. The next part is to develop a technical approach that allows you to repeat that process of risk approach every time you engage the market for the next 500 trades. And I leave you today, my dear friends, ladies and gentlemen. Thank you for being here once again, and I hope to see you here the next time. Thank you for following, and all the best for you and your families, and safe trades for all of you. Thank you.